Welcome out to the halftime report. It is July 19th, 2019. Today, it's just myself and Coach Mark. We threw out the other two, and we're going to have a good time today. Mark?
Because it's Fun Friday, right?
Fun Day Friday, yes.
We always have fun on Fun Friday.
Friday Fun Day.
You know what I'm having fun doing? I'm having fun trading Beyond Meat.
Really?
This stock is absolutely, boy, it's not boring. It's not boring, but let's get through some of the major markets and then we'll talk about stocks. We'll talk about whatever you want. We're going to do a lot of rapid fire today. I don't have anything terribly creative to add. The Fed has signaled once again for I'm not even figuratively saying this, literally probably the 200th time in a speech or some comment, and that is not hyperbole. That is a literal statement. In 2019, at least 200 statements that were dovish. And
yeah, there was
single hawkish statement.
There was one I saw this morning that it was so dovish that he actually was told he had to walk it back a little bit.
I mean, yeah, that's where we're at right now. So listen, the Fed is there. Any sharp decline, I mean, we look at the chart here, little pullback, what happens? Bounce off that rising moving average. These pullbacks are better than the breakouts right now because the market doesn't have a lot of steam. Doesn't have a lot of steam. And so we don't have anything barring, earnings just knocking it out of the park across the board, which isn't really happening. They're okay.
Did you see Microsoft's earnings? they kind of knocked it out of the park. Well, they did gap up and they came back a little bit, but
as a whole. But these pullbacks, and this is what I've been talking about for a long time now, is that with the Fed having your back, with the Fed being dovish, the market has supreme confidence on sell-offs. So when the market sells off, it's the old saying, buy the dip. That is in motion right now. You've seen that. Look at the chart. Every time in the last, almost 2 months now, every time that you've had a slight pullback, what has it been? It has been a bullish opportunity to get in. And the Fed, and this is why we talk so much about the Fed, and I know it's boring and it's not excitement, and it's actually the exact opposite of a Fun Friday. But that's why we talk so much about the Fed, because it gives us the context of why when the market pulls back, it creates a buying opportunity. It's a buy the dip. It's a buy the dip. As long as we exercise proper risk management, as long as we don't go crazy, this is a positive trading bullish environment on pullbacks. Breakouts, which I know a lot of people love to trade, myself included, is not the greatest market for a breakout because we don't have that euphoria. Go to gold right now.
That's natural gas. Gold's gonna be right below that. Here we are.
Gold.
Oh, excuse me.
In gold, we've had euphoria over the last 2 months. That's what charts look like when you have euphoria. We don't have that in the broad markets. We don't have that in the broad markets. But what we do have is a lot of traders and a lot of investors that are very confident on doing those short-term trades when pullbacks occur. Now, if you do not know how to trade a pullback, what did we release recently that has a whole module on the bullish pullback? The bullish retracement, as we like to call it.
I can't think of it. Oh, what was that system called? It goes through the steps of how to trade that. Step system.
The step system, indeed.
Oh, alrighty. All right, got some tweets going on right now. The market, honestly, I spent my morning really just closing out of things over the weekend. I'm curious to see. We should have a lot of setups in the meeting this afternoon when we do the scouting report meeting. I can only assume that most of them are going to be some bullish pullbacks with great, easy triggers for us to find. So I'm definitely excited for that meeting that we're going to have.
Listen, I walk away from my screen and Beyond Meat goes up $100. In the time I had talked about the Fed.
Here, I'll just bring up Beyond Meat right here.
Yeah, let's just trade. Let's just have Beyond Meat on the screen.
3%.
Oh, Beyond Meat, and Beyond Meat is breaking out of that little consolidation pattern that it had. Draw a nice little horizontal line.
On the hourly.
Draw a nice little horizontal line on that breakout point, and we see that we have a breakout occurring on Beyond Meat. And you know what the catalyst was today?
What was that?
And this stock is insane. I think this stock is one of the most overvalued things. That doesn't mean I won't place bullish delta trades to the upside because I'm a trader. I might be right in the long term, but trader first and foremost. The catalyst today was 95% Market Watch article of all vegan burgers ordered in restaurants are from carnivores. Are from carnivores. Trying a vegan burger. So it's not your vegans and it's not your vegetarians that are just buying the products. That article's like, oh wow, you mean somebody that has a steak can also have a vegan burger? And I was like, yeah, that's what I do. Yeah, I love me a nice steak, but I do have vegan cuisine that I do eat that is actually delicious. I've actually become a very good vegan cook.
My wife loves her like bean burritos and stuff, and I'm like, "Where's the meat in the burrito?" She's like, "Just a bean burrito."
It's all about balance.
Or just like a potato and egg breakfast burritos, and I'm like, "No, I need like some sausage in there."
Oh, listen, I have a soft spot for animals, and that is one of the reasons I cook so much. But man, bacon and sausage is so good in the morning. It just is. All right, let's go to oil real quick. Let's go take a look at the oil markets.
All right. Latest news is Iran and the Strait. We have another drone going down and trying to figure out whose it was, apparently. Yesterday, Trump came out and said that we shot down one of their drones. This morning, they came out and said it wasn't ours. So I'm kind of curious about that.
The international conflict has a tendency of creating a lot of havoc in the oil markets. One of the catalysts in oil on the run up that happened in June was the tension in Iran. When that tension pulls back a little bit, who did Trump send over there this week to discuss that?
Trying to tell you off the top of my head.
Rand Paul. Was it Rand Paul?
That might be it.
Might be it. But when that de-escalates, that creates all of the things that were going wrong with oil back. I'm very excited to start selling puts again at a lower level, start my boomerang trade. OPEC has the difference between the boomerang trade now and in late May, June on oil is OPEC's already done their deal. They've already said they're going to cut production. Now, we assumed that was going to be the case, but we now have that baked in. We got a 9-month production thing. There's obviously some negative sentiment in oil, but I like the boomerang trade here on oil. I like the boomerang trade. If you want to be safe and wait for a reversal signal, go to USO. Cody, real quick.
USO. Is that where you do most of your puts on?
I do, and it's where I teach all of them because it's applicable for everyone. So let's go look at a trade right now. Let's go look at a trade right now. All right, so we had a little support level just north of 1050, just north of 1050. That's somewhere where I feel very, very confident. Now let's go out to August. We're not going to get much for this credit, but let's go out to August. And once again, this is like this. I love teaching USO boomerang because it's one of those instruments where you're not going to get killed, and yet you can start the principles with a live trade on the boomerang trade. So if you have dollar options like an interactive broker, these smaller spreads become a lot more manageable. Obviously, if you're paying $5 per commission, doing a $10 boomerang at 1050. But what will happen, let's say we come down a little bit. Let's say you want to be patient a little bit here and wait for a sell-off. Go back to the regular chart. Go back to the options chart.
Yep.
All right. So, I mean, let's go look at what those at the money August would be selling at 11.50. So if we come down a little bit, let's say we have a little slide in oil next week and we get a lot closer to that 10.50 where oil slides. Well, all of a sudden we're getting about 40 bucks on that first put. And that becomes really, really appealing. That becomes really, really appealing. So if we slide in oil next week, selling those closer puts to 11, 10.50 that would be getting closer to at or in the money, you know, not a bad place to get your feet wet with a boomerang trade. There is a natural floor in oil. There is a natural floor in oil, but maybe wait, be patient, be a little bit greedy. Instead of selling that, even if you have interactive brokers and can do dollar commissions for 10, you know, and sometimes, you know, I'll do 5, 6, 7 of these to start a boomerang trade. But wait for it to get a little bit closer. If you're new to this, if you don't have confidence, because the last thing that I want to happen, and this is what sometimes happen when I talk boomerang trade, is I'm doing a boomerang trade on X, which, you know, I've been 100% in every boomerang trade I've shared with individuals this year. With every boomerang trade
but you're very particular as to when you get into these trades.
I'm very particular, you know, and because it's one of those things that I want to feel confidence in what I'm saying, because I know a lot of people. But what I do know traders do is they'll say, oh, Mark's doing a boomerang trade on this. And then they do it and it goes down and then they close it out at a loss. That, you know, you're not ready for long-term cash flow boomeranging if that's the case. I think I'm up to 4 articles on the last 4 commodity reports on the boomerang trade. I'm going to start this week talking about selling calls. Now, the one thing about selling calls and how I'm going to discuss selling calls is it's going to be applicable. Everything I write for the next few weeks in the commodity report is going to be applicable to not only the boomerang trade, but covered call management as a whole. I've never written for tackle trading and laid out how I sell calls, how I manage calls, the trade adjustment possibilities. But for the commodity report for our pro users, is going to be there laid out. So even if you're not interested in selling a put and buying oil, even if you're not interested in the boomerang trade, I know a ton of you out there sell calls. A ton of you sell calls. So even if you're not interested in gold, even if you're not interested in oil, I know a lot of you sell calls. So check out those articles.
Well, I don't know anyone who's selling calls and hasn't looked at selling puts. And if there are out there, then look at both sides, because the risk graph looks the exact same. The risk graph of a covered call and a naked put look the exact same. And the commissions, that the capital requirement to do each of them is about they're close. But yeah, the boomerang is simply just adding and playing both sides of the same instrument to cash flow over and over and over again. It's beautiful. So yeah, if you are selling calls and not puts, you need to look at the other strategy and start learning, like, okay, what does it look like if I sell this put? Because by doing that, every time it pulls back, sell some puts. Every time it moves up, you sell some calls. It's such an easy, simple strategy to do. And it just comes down to the actual trade management of when do you get in. I'm assuming you got your eye on Beyond Meat again. What you looking at there, Mark?
Oh, I do. It's breaking out, and I'm just doing a quick.
You can always tell, guys. Mark gets quiet all of a sudden. And it's like Mark's making a trade over there. It's having a very nice little breakout.
Hold on one second.
Very volatile, though.
Yeah, I apologize. I just have to do. Listen, I am the relief pitcher at Tackle Trading. I didn't know I was going to be on here till about
5 minutes ago.
5 minutes ago.
Show had already started. All
right, let's look. All right, so I mean, that's the big market analysis I have right now. Like the Fed, those pullbacks are good. You know, look for the euphoria. If you're going to trade individual stocks, beware of earnings. Let's open up for rapid fire the rest of the time.
Yeah, I'm perfectly fine with that.
It's on Friday. I've given you my 2 cents. The major things on my mind in the halftime. Those pullbacks have been golden. Boomerang trade on oil, and my mind is obsessed with Beyond Meat. So now let's go to boomerang. Not boomerang. Let's go to
rapid fire, guys. So if we have any new students here right now, rapid fire is you place any ticker symbol for any stock you want us to analyze, and we will analyze it and give you our quick take on it based on the chart. So it looks like we have a couple coming in. VEEV. Mark, you want to start us off?
Oh, nice catalyst on earnings. The best. See, this is one of the problems with the lumps. All right, so we had a breakout on VEEV, and I don't like charts like this for bullish plays. And the reason I don't is like, all right, we just had a breakout 9 days ago. All right. Wasn't a lot of oomph to that breakout.
No.
I don't like stocks that break out, pull back, trade a little sideways. I'm going to go find something that's cleaner. So we obviously have a resistance signal here just south, looks like at 177, little resistance area there. But I don't like stocks that break out and just hang out for a week, pull back. It's just, there's a lot cleaner setups that you'll find out there. So,
all right, I agree with
that.
I mean,
obviously a ridiculous uptrend, but the thing's gone up to, 100% in 2019.
Yeah, break above 77 is tradable. Other than that, it's probably just going to meander sideways. Moving on.
Look at the price action today. Another potential. Here it is. So we've had highlight a little closer. No, go back to the daily chart and highlight the last 2 weeks. How a stock responds to classic signals. So what do we have here? We had the breakout that didn't go anywhere. Little pullback. Clear those short-term moving averages. Go above the high again. These are really standard trading signals that are bullish, and VEEV doesn't want to do anything with it. A lot of the juice, a lot of the momentum might have died here. So I don't like it for a bullish play because, I've had 2 bullish signals in 2 weeks, and it's not done anything with them. It's not done anything with them. That tells me that might be petering out. Might have
lost its steam. All right. Moving on to DocuSign. DocuSign used to be a sweetheart of mine, but we haven't been getting along lately. The reason I say that is that DocuSign, where it was behaving in patterns, last year, the year before, where there were actually tradable signals for breakouts and things, now it's just been a whole lot of messy nothingness. So when I look at this chart, I think that there are better things out there to play. This is not the easiest trade.
They don't disagree with that.
No. And silver. Mark, as our commodities expert.
All right. So silver's had a parabolic run in the last week. A lot of it spurred. Breakout that occurred, what was it, Tuesday? Mm-hmm. So we had a little resistance area breakout. So we have a huge bullish signal that occurs on Tuesday. This is a classic case that if you miss the breakout signal, because that was a pretty good channel. You go back to February, March. We've really had resistance for the bulk of 2019, February through July, at a pretty easily identifiable level. So we have and I'm just talking from technical analysis here, we have a breakout of that level. All right, so there's your breakout. We have confirmation that occurs the next day in a strong way. So you have this huge run up on the breakout, huge run up, really significant resistance area, breaks out, huge run up. And it's one of those, if you miss the initial trading signal, it becomes really difficult. Now, go back to gold real quick. Because what did gold do? Because we had a similar run up in gold over that at the start of June. So we had that huge run up. So breakout of resistance. What was it on June 8th, June 9th, what was 14th maybe? Go fast forward a few more days.
Right.
All right. 19th. So on the 20th or 19th, 20th of June. All right. Yep. Then we have our huge run up, similar to silver's. Silver's a little bit crazier, but the same general principle. So we have the breakout of resistance. We got that huge 3-4 day run up, and then gold starts evening out, becomes a little choppy. All right. So in silver, what we would like to see is we'd like to see that short-term support form again. Short-term support form again. Becomes not advisable to play breakouts, as anyone today would find out, because now you've entered a point in the chart where there's going to be a lot of back and forth volatility. But go back to gold, and I want to show you a signal to look for on silver. It's going to take a couple weeks for it to come, but look what gold did every time it came down to the 20-day moving average.
Kept bouncing off.
It bounced off. All right. And for those people that have heard me teach in the lounge, you'll know that I've talked about this several times. Those run-ups that occur, it takes a long time for those short-term moving averages to catch up to the chart, to catch up to price. But once they do, what did we start the show with? That bullish retracement. Seriously, I can't remember if it's module 3, module 4. I think it's module 4 of the step system. If you're not a pro member, go check that out. The bullish retracement is so strong. And what we saw in gold, pull back to the 20, bounce. So we have all of this euphoria, all of this excitement. And what does it do? Bounce off the 20, bounce off the 20, bounce off the 20, creating opportunities to get in where you might have missed out. So don't chase, as a general rule, when these huge parabolic breakouts occur. Wait for some form of a pullback to get back in,
Love it, love it, love it. Silver is definitely something I have my eye on because I want to see this thing. I have some FOMO. I missed out. I don't like it. I want a pullback. I want a high base. I want those moving averages to catch up so I can join the party. Let's see. KBR.
Hold on one second.
KBR, is that earnings that caused it to move? No, it's not. KBR moved off of some type of event today that is causing it to gap up. I do not know what that is, and it has earnings in next week. So right away, just looking at this, if you're not in it, not much I can really tell you to do unless you're looking to play earnings. You were in it and you gapped up, then take the gift and take some profit there. That's my thought on KBR. Micron, which I will give back to Mark because that's also a darling he used to have.
Hold on, I'm going to need a few minutes.
All right, then I will keep on rocking away. Micron having a breakout above a long-term resistance level at 45. It had a small pullback with the market. Now that we're getting that breakout, this is absolutely a tradable signal to the upside. Nike, we have a little bit of a pullback back into an old resistance coming into that 20-day moving average. So if we can get a pause and then confirmation back over, I want to see it somewhere above today's high, above 88 somewhere. That's be my entry. First target obviously is going to be 90 at old resistance. Second target could be a pay range, which will probably be up to about 92. Next after Nike is MDT. MDT had its move, and now that we're starting to get one down day, I believe this is on one of the reports. I think we had the first target around 104. It didn't quite get there, but this movement is still moving up. I would let this trade play out just the way it was planned. Keep your targets in there. If you don't like the candle today, I wouldn't be too worried about it because the market has that pullback. So if it moves next week, then this should continue its trading momentum to the upside. Next is FCX. FCX, there are better charts out there. Earnings is tomorrow. I'm not going to play this thing on earnings. If you own it or if you do calls on it, make sure you cover before earnings.
All right, I'm back.
All right.
Did my trade adjustment.
I hammered through about 4 of those real quick. Just give my analysis.
Well, listen.
GameStop. They're going bankrupt.
I mean, we've been making that joke and that comment for a year now,
and it's been going down for a year.
I mean, anybody that's heard us talk about GameStop for a year now, whenever it's been mentioned, this company has very huge structural problems, has fundamental shifts in the gaming industry where people don't, I mean, and this is one of the things is that I know we're traders, most of us, and I know we pay attention to our chart, but understanding the dynamics behind a trade, whether it's Beyond Meat or GameStop or oil or whatever it is, gives you tremendous, tremendous confidence in your positions, in the trades you make. GameStop's, there was a shift over the last few years. When you used to buy PC games, where did you go?
Walmart.
You went to a store.
Yeah.
Like, so when I wanted to buy a PC game, I would oftentimes go check out the used bin at GameStop. I'd go see what GameStop had to offer. I'd go to Best Buy. I'd go check out what was available, and that's where I'd buy.
Mm-hmm.
GameStop used to have, like, when they'd release major releases, lines around the block on major releases, lining up to get the game. How do gamers buy their game these days?
All online. Steam.
They buy them all online.
Mm-hmm.
They buy them all online. And a fundamental shift, in an even more dramatic fashion than Amazon has had on a lot of retailers, that online shopping has had on the retail industry as a whole. Now, if you're shorting GameStop, this is what I ask when a stock gets this cheap. I'm like, where's my profit? It's already tanked to abysmal levels.
Yeah.
Now, if it rallies for whatever reason, let's say some BS headline comes up and you get a rally to one of those
their CEO or something like that. Yeah.
Yes, something like some BS rally on some BS news where it just takes off for a little bit. Well, there we have a shorting opportunity. So in these situations, I like to be really greedy. I like to be really greedy on what I'm doing. Yeah.
Yeah, I've been continuing to short this thing, and I bought way out in time, and just letting those things run, letting it slowly just run towards my put options. So I'm happy. Next after GameStop, Richard, I saw that you said, hey, what happened to MU? I analyzed MU. I just did it very quickly. I rapid fired it. HD Home Depot. Mark, you are up. Oh, that's an easy pullback.
And let me, all right. So draw a line on the peak resistance channel. Go back in time. Go to a weekly chart on this one. All right. So we got, that breakout, and now we have a pullback.
Mm-hmm.
Pull back to that old resistance level. All right. So let's talk practical retracements that apply here. What is your signal for getting into that pullback? So we have one concept right now going on. We have old resistance acting as new support. That is a core technical analysis concept where you break out and then you have a pullback to the old resistance level. That is a core concept in technical analysis. So we might think, all right, that might apply here. Now let's go to a daily chart. So what we want to look at now is we want to look at something and highlight recent price action. All right. We want to have something that shows us that it might be stabilizing. What are some signals we can look at here? Well, I mean,
the candle width, the range of the candle that we're getting.
Okay.
And
so we got a nice inside candle going on right now. Mm-hmm. That's generally bullish after 4 down candles. I mean, this is a classic step system.
The volume starting to decrease at the top as it's coming down. Not many people want to
buying on the way up than are selling on the way down. So we got some volume. So we got some really positive concepts here. We got a candlestick that might even doji. We'll see where price ends today. We're above that 20-day moving average, which could act as support, as we've seen on how many charts just today.
Yep.
So even if price pulls down, we got that 20 acting as our friend. We have a potential bullish candle set up. Well, it could doji, inside candle, decreasing volume. We got a lot of positive things going on. From a chart standpoint, core technical analysis principles going on here. Core technical analysis principles going on here. So now, where's our profit? Because we kind of have to target, if we play a Home Depot trade like this, got to target that previous resistance level. So this is the analysis we'll do later on this afternoon when we analyze stocks. All right, so come down, positive setup. How much profit do I have? All right, so let's say we play above the high today. What's the high today?
The high today is 215.23.
215. All right, so 215.23. So I got about $4 potential profit. Right? And why is it $4?
Because we're targeting about that old that pivot high right here, that 120, 119 around there. So $4 somewhere in the range between 219 and 220 is going to be our first target.
All right, and so this is what we go through as coaches, and what we should all go through as individual traders. What we should go through when we're doing analysis. All right, how much potential profit? Now, how much risk do I have on the table? Go back to the daily chart. Let's say we target, 40, 50 cents underneath that 20-day moving average. I don't like putting my stops right at the 20. I think that's dumb, actually, because you got
to go below it.
A chance to work. So you got to put it a little bit below that 20. Give that 20 a chance to work for you. Because if you just put it at the 20, why do I think it's dumb? Because that's a potential support bounce area. Yeah, so if you're putting
it could bounce right off it, get you out, and then keep going.
So if it comes down, so I got to put it a little bit lower. So let's go about 50 cents lower. Let's go to 211. Let's give that 20 a little bit of room to work. All right, so I got $4 potential profit to the upside. Now, if I get in at, what's the high today? If I get in above the high today,
215.23.
All right, so 215.23. All right, where's my stop at? 211.
211.
So I'm risking about $4 to make about $4. That's not the greatest risk reward ratio. And this is the process we go through. Is there a potential opportunity? There might be. But how much are you risking versus how much is your reward? We want those to line up with one another. We want those to line up with one another. And we want to have that positive risk reward ratio, 1.5, 2 times. At least.
Now this is our first target, so this could still pass according to the way that we pick stocks.
It depends on where you put that
one.
So right now, I think I don't like to try to make it work. I think you're just south by a few percentage of 1-to-1. And this is where rules come into play. If you say, well, I got 95% of one, I'm almost 1-to-1. What are your rules? Are your rules saying I got to have a 1-to-1? And that's where you do the math. Now, there's a good opportunity. Now, there might be a better opportunity on Tuesday. There might be a better opportunity on Wednesday as that 20-day moving average rises up, and you get to raise that stop loss a little bit. And then all of a sudden, the same trade, all of a sudden you have a solid 1-to-1 or a 1.1-to-1 or a 1.2-to-1. You want to be in a position where when you're winning, you're making more money than when you're losing. And that's trading. Because you're not going to be right all the time. But when you're right, you need to be making more money than when you're wrong. So that's my 2 cents.
Absolutely. And I'm going to pull this over here because I want to show you guys something really cool if it'll ever open. If you guys don't know about this, the actual watch list, my watch list within Tackle Trading, it's got a really neat tool where you can instantly get your risk to reward ratio, and it'll tell you whether you're 2-to-1, 1-to-1 for you. So up here, I can have I can add any symbol I want up here. So actually, let me add in Home Depot. Looks like it wants to go slow today. I may not be able to show you as it's arguing with me. But right here, guys, right here, you see me circling this tool. Me and Coach Frank, when we had the report to ourselves a while back, we were showing you guys how to use this, where you can set it up, and basically you say, I'm putting my stop loss down here. I'm taking profit up there, my target. Here's my risk reward ratio I'm getting, which this one's about 1. Let me move that guy over a little bit. It's going slow. All right, I'm done with you. We're exiting out of that. What's our next stock we have up here? But guys, go check that risk reward tool out over on Tackle Trading. It's really cool. It makes things really simple. It's actually, while we're doing the reports, Coach Frank always has that up there so he can quickly tell us what the rewards are as we're going, and we'll eliminate certain stocks if they don't meet those. They don't go on the report. Next is Lyft. Mark, I will give you Lyft again.
Before we get that, go back to Micron. I want to take a look at the Micron chart again.
Okay.
I know it went through it fast. I just want to give my 2 cents on it. It's a breakout. I mean, Micron's shown tremendous umph ever since its earnings. I gave quasi good, not great advice on Micron a couple weeks ago, where I said, I like boomerangs now. I like selling puts down to that support zone. Obviously, the better advice would say this thing's going to take off. So didn't have a good feel for it. I mean, I knew there was stability because I said sell puts now, boomerang this, if you remember, but I didn't trust the move up. Didn't trust the move up. Well, we're breaking through resistance levels. We keep breaking through resistance levels. This thing's showing some umph. Is showing some umph. Go to a weekly chart now. I mean, if you're in Micron, if you got in at any point on Micron, obviously things are still going well. Now, we do have a situation where we're having a major potential reversal here. A major potential reversal. Sharp movement down, trade war news related, a lot of concern. But we are clearing moving averages. We cleared the 50 weekly moving average, closed above it last week, got a confirmation to the upside this week. I mean, these are really solid bullish trading signals. I wish the move was a little more moderate. Go back to the daily chart. So once again, we're talking about those daily moving average. I mean, that 20-day moving average is still a ways below it now. So that's not going to help you. Now, my girlfriend there is doing a good job with Micron every time it comes down. So there is a lot of umph in Micron right now. We're beyond earnings. Pullbacks, little stabilization could create some really nice trading signals. And one might argue, well, Mark, that's what it did last week. That did what it did last week. Pulled back, breaking out of that. I just don't like it when stocks run up this much. It's not my personal taste, but I can't ignore the signals right now. From a technical standpoint, they're really, really strong. All right, go back to Lyft.
It's like when someone sprints for 5 miles and then you ask them to run another 5. They're tired. They need a break. Lyft finally starting to show a little bit of strength from what we thought was going to be.
I mean, if you played the breakout today.
Yeah. I mean we had this on the report as a breakout, 3 or 4 weeks ago, and it kind of poked its head up, poked its head up again, and then came back down, shaking out a lot of us all at once. But now it's. I mean,
if you got into the breakout, it's not too shabby. Anything from this point on a breakout this strong is pretty much a momentum play, because you do have that peak at around $75 coming up. So you got some room up to there, but your stop would have to be pretty close underneath the breakout point. So if you want to play the breakout, the stop underneath the resistance area, targeting that, the risk reward is going to work on you on that for a momentum trade.
Very nice. I lost my place in the chats. Lockheed Martin. Lockheed Martin, always a good company to play with. Defensive
Now,
stocks.
A little bit deeper pullback this
It
time.
does have a deeper pullback.
All right, so we're caught in a little bit of a pinch situation. And a pinch situation, I use that term pinch to describe when price is between a shorter term moving average that's descending and a rising moving average. It can also occur between horizontal support and resistance at times. But primarily, I use it to describe when price gets caught between two significant moving averages. We got a rising 50. We got the 9 descending, that 20 flattening out. So you're right now here in a little pinch zone. When things are in a pinch, they can become very, very tricky from a technical analysis standpoint. When that 9 gave out earlier this week, listen, I'm not the only one that uses those affectionately. When that gave out, that was the first time it gave out in almost a month. A lot of downward movement after that. I mean, I know you hear me joke about the 9 EMA a lot, but boy, is it a great short-term trading signal.
And even with the great signal, we got earnings right there.
Yeah, well, that will break that pinch really.
That it will. If we get some good earnings, it'll move to the upside. We get some bad earnings, it'll break probably the 50 to the downside. Next, after Lockheed Martin, PCG. PCG, large utility company out of California, got destroyed from those wildfires and having to cut their dividend. And, went from, and actually, if I go further out than what I'm in now, I believe, at one point it was a $70 stock. Now it's a $20 stock, $17 stock. I have a hard time wanting to touch this thing since all of the gaps down that it's had. It's kind of starting to find a base. It's sideways. It's neutral. I'm not seeing any huge potential. Nothing tells me that it's going to go back to 70 anytime soon. Even if it were to break the 200 and start petering up, then that's all I think is going to happen. It is a utility company. It does move slowly. But if you wanted to use this as a cash flow cover call, iron condors type strategy at this price, I'm okay with that. If you're buying in around these prices and selling, I'm okay with that. If you're still holding for back win, don't hold your breath for it to go back anytime soon.
I'm short Beyond Meat, not money today. And go back to Beyond Meat.
Oh, this rapid fire is going to be nothing but Beyond Meat.
Well, to be fair, that's the first time I brought Beyond Meat in rapid fire. There's a breakdown. These things, this is when these signals occur. It happened on Lyft today. When you have these high base-ish type formations where it trades sideways, your clear resistance area. Beyond Meat's up like $250 since we started the halftime report. Crazy, stupid stock. Can't wait till it comes down.
It's up $6 since we started the halftime report, but 200, that's a little bit of an exaggeration.
So, no, Beyond Meat. All right, a couple more, and we're going to close her off.
All right, sounds good. G, which I actually noted already myself that it was on stock or options, one of the two, and it did trigger today. So if you got in today and you're willing to hold this over the weekend, then awesome. I typically don't trigger in on Fridays, but I would trade the plan that we have set up for targeting. The pattern hasn't changed. It's the same it was at the beginning of the week. It just took till Friday to trigger.
Sounds reasonable to me.
Let's see what else is in there. Docu, not Docu. Oh, I did get those mixed up earlier, didn't I? I was wondering. As I'm sitting there talking, I was like, this chart doesn't look like what I'm used to seeing. But yeah, DocuSign's kind of sideways right now. Needs some kind of movement one way or the other before you can do anything. You can sell condors on it or some type of cash flow strategy, but directionally, I don't see anything here.
When you got charts this messy, because, is it kind of drifting down over the course of the last 4 or 5 months? Yeah. But listen, don't overcomplicate trading. Don't overcomplicate trading. And that's a beautiful trend line Cody just drew. That is a beautiful trend line. What did price do 3 days ago? If you want to go bullish, if you're looking for a sign, there's your signal right there. getting above that trend line. But what happens if you even get above that trend line? Well, you got other peaks of resistance right over it. Don't know enough about the company to give you any fundamental criteria here. The chart's really messy. So from a trading standpoint, it's just difficult to find great entries.
And see, this is DocuSign. This is when I was playing DocuSign, and I loved it. It was awesome. When it started doing this, I stopped trading DocuSign. I don't get attached to the company. Get attached to the pattern.
Listen,
and then as soon as the pattern ends, break up with that and go somewhere else.
I mean, it stayed above the 9 EMA for 2.5 months.
Yeah.
That 9 EMA is powerful. That 9 EMA is powerful. And for pro members this coming Wednesday, I'm going to talk about moving averages on a master Mind of the Trader this coming Wednesday. So look forward to that. We're going to talk about that 9 EMA and signals and 20 and how you can use these short-term moving averages to help manage trades. They're really, really powerful and momentum trades. I mean, what happened once it broke the 20 in March? Well, you've had this mess ever since.
Yep.
You've had this mess. But every once in a while, something gets trending. And that's when we want to jump. When we're getting those strong signals. When we're getting those clear-cut signals, trends develop. They can last for a while. Lots of good trading opportunities. When the chart gets messy, go find something that's prettier.
All right, I'm gonna do 5.
Do it for me today, Cody.
That's it. All right, I'll hammer through a handful. Starbucks, look for a pullback. Needs something to get in. It isn't a clear uptrend, but I need a better entry point. I'm not going to chase it. Ilka, you put in way too many. You're getting greedy over there. So I'm going to skip those. Go to Oracle. Oracle looks good. Look for the trigger above the 9 EMA. First target's going to be up towards 60. That's a nice setup there. And AMD, we can end on AMD. This is one that a lot of us trade. Mark, what are you looking at with AMD? Because I know you traded as well.
Dude, AMD struggles at resistance sometimes. That's what's happened here. We need a clearer pattern to play breakouts. I mean, I know so many tackle trading members are in AMD. The pullbacks like the one we had a few weeks ago that Matt was talking about all the time, you know, that's when we want to jump on potential entries. We want a little clearer signal. It's hard to get. AMD's chart is never as clean as your average chart. Lots of bullish momentum here, has been all year long. Those deeper pullbacks, go to a weekly chart. You want to talk about, you want to talk about, and highlight. I mean, those weekly moving averages, pullbacks to that 9 EMA and signals there have been really, really good. Really, really good. When charts get messy, I like to lengthen the time frame, go out to a little bit longer time frame, clean up the chart. And if you look at the weekly chart here, I mean, we're battling resistance.
Yep.
We're battling resistance. Becomes really, really clear to see on a weekly chart. Really clear to see on a weekly chart.
And earnings next week could be the catalyst to get it through it, but it could also be a catalyst that sends this thing down and we're done. Failed resistance. Earnings
on AMD is no joke.
Yeah, they're wild.
Earnings always matters for every company. On AMD, it's massive because we're dealing with, to be frank,
look at this,
a string of earnings that haven't been great. Most of the catalyst around AMD have been news oriented, have been speculative oriented. Oh, they're doing business here and they're marketing. Their earnings have kind of blah. The last two. I read AMD's earnings report every time. So the earnings themselves aren't great. So really, really, really critical time coming up for AMD on earnings.
All righty. Well, that's going to wrap it up.
Obviously, when AMD releases their earnings, we'll be all over it because we know how many tackle trading pro members own, sell puts, do covered calls.
It is the 30th, which I think is still 2 weeks out. So probably next Monday or 2 Mondays from now, the 29th, we'll make sure we talk about AMD's earnings beforehand. with that, guys, we are going to wrap up the halftime report. Let Mark get back to his trading of Beyond Meat. And I will see you guys this weekend.
All right, see you guys. All right, I got a jet.